David Kostin is with Goldman Sachs, our chief U.S. equity strategist. He has been out front on rationalizing a higher equity market value. What's the conviction of 4,700, David? I mean, after earnings, after all, do you feel behind where you've got to maybe extrapolate out further?
Well, thanks for having me on this morning. The outlook for this year of 4,700, look into 2022, the next year, around 4,900. So you have a trajectory that moves higher. Let me put a couple of numbers on the table for you. The U.S. economy will be, in nominal terms, around 8% higher this year than pre-pandemic, 2019, 8% higher. Sales for the S&P 500 companies will be 15% higher, and earnings will be 34% higher. So that is a representation, an example of the operating leverage that exists in so many companies. And so that's a first way of thinking about the remarkable recovery in margins. We're now back today, this year, this quarter, in fact, at record high margins, greater than they were in 2018, 2019. So the margin story is very significant. But actually, picking up on something that Lisa just mentioned, the opportunity set for investors in other asset classes is really not very attractive if you think about it as a portfolio manager. And so equities become the proverbial term, there is no alternative. And that's ultimately a money flow story. And so corporate buybacks, the authorizations this year running at record levels year to date relative to previous years. So that's very strong. And individuals' balance sheets are quite strong. And therefore, you're seeing what I would expect, significant flows from money market mutual funds into equities. So this is sort of a money flow story about why there's likely to be persistent demand for U.S. stocks, and that's likely to push the market higher, number one. And then number two is rates, while they may move slightly higher, and our baseline assumption is that the 10-year U.S. Treasury yield, nominal terms, will be around 1.6% at the end of this year. And so from a valuation perspective, equities are reasonably valued in the context of interest rates. So that's sort of the base framework that we think about in terms of the equity market.